Sorry, I jumped the gun with the ending right there. Just wanted to let you know you had 3 seconds. 3 seconds. Or 3 days, or whatever it is. We'll get Bob's take on everything today. Bob will be on in a minute. Hey ho, waka waka. Good afternoon. I think that was supposed to be Mike, unless I'm now Ike, which could be the case. Afternoon, Jake. Told you it's a F up Tuesday. Well, it was doing fine until the until after the European closed. The Bank of England opened their big mouth. Good afternoon, Davey. Yeah, we got BOE with the mic drop. There we go. Yeah, that was the title for this live stream. Got 3 days. Yeah, BOE. We even had a nice double unfolding stop raise, nice little pullback into lunchtime, and then all of a sudden watching the futures tape, and I'm like, well, that was swept out a bunch of orders. Somebody said something. Why we use stops. Sashi, QE, or Pivot Talk. By the way, I got to get Bob's take on Mester too. I thought it was pretty cut and dry, but I'm sort of getting sick of Fed speakies. Had to get that in speaky in there for Bob too. Let's just get straight to it with some more questions. Hello, Patrick. Hello. Market on the edge of rally or collapse. We're good. This would be a great time if you could get it in at right volatility for a straddle, because this 3,600 so far been a brick wall in the S&P, but if that breaks, then we will probably get that capitulation move I've been talking about. With that, just if you want to hear what Bob says and you haven't been here already, just subscribe. That's all I'm going to leave it with, and I'm going to bring Bob on right now. Bob, yeah. Make sense of this for us all. We got the Bank of England. You got 3 days, Bob. You got 3 days? Let's start with that.
I think Waka Waka's got it covered. He said they let their guys out. Now they're going to have the rest of us hold the bag, or whoever they is. Waka's got it all figured out.
Waka's got it figured out?
Yeah. They did something, and they are going to let their friends do this, and then they are going to make us do other things. I don't really understand it.
Why didn't they let me know ahead of time then, Bob? They should have called me.
They only talk to they.
Oh.
Or they only talk to them. I don't know.
I didn't get advance warning.
I don't know who they is, and I don't know who them are, and I don't know. Look, it's let's talk about our Fed speak first.
All right.
You would use adult language, Mike. Our Fed speak is
speaky, yes.
So Waka Waka says they are the pension funds and the big banks. So what number, Waka, do the pension? Because it's not all the pension funds. Otherwise, there would be no pension funds with losing results, and there'd be no big banks that ever had any issues. You got to let me know what asset level it stops at. Okay, what asset level does they stop at? Because I don't know what that is either. By the way, they love margin calls. Now I'm doing it with they. I don't know. Anyway, when I was at the bank,
Ted's got it. Hold on, Bob.
Yeah.
Ted's got it summed up. They suck.
They suck. Okay, now I know who they is. Thanks, Ted. That clears it up for me. No, I mean I'm jesting, obviously, but a lot of people use this they. You guys ever watch a guy? His name is Todd Horowitz. Mike, have you ever seen Todd Horowitz? His nickname is Bubba, and he has this like Bubba Trades channel and all this. And I'm telling you, every time he says something, he's like, oh, they rammed it up and then they took it back down so they could buy it lower and sell it higher. And that's what they did. And that's his explanation for anytime a trade goes against him, it's because of them. And I mean, anytime a trade goes his way, they let him make money on that trade. And I mean, it's like, I don't even know what to make of it with the they. The reason I'm picking on this is because we all operate, and by we, I mean all of us that are not at a central bank or at a Goldman Sachs. I'm going to cumulatively refer to myself and Mike and all of us as retail. Okay. Now, I don't have a retail background. Mike, I think, well, I mean, Mike was a market maker. That's not quite retail, but it's still individual. But, I worked at a hedge fund. I guess I wasn't retail then. I was part of they, although I don't think our hedge fund was big enough to qualify to be a part of they. We all, Daniel has a funny comment there. They all, people like to blame, we all operate under the same rules. And some people make money like Mike, and sometimes me, and then some people don't. And none of us know what they are doing. So just stop all that and learn price action so you don't have to worry about what they are doing. That's my point in saying this.
It's
In terms
okay
of
because Waka's changing they to them.
they to them, I think according to Daniel McMindes, I'm not sure if I'm saying that right, I'm going to go with Zer. Okay, so instead of calling them they, we're going to call them Zer or Z. I don't know, whatever. Look, I got off the subject because I always want to talk about the they when I see people blaming they. And I think Waka Waka was kind of tongue in cheek with it as well. But I think there's a part of it that Waka believes. But anyway, even if there is a fictional they, we already know that the plunge protection team exists. I would call them a they. But there are market myths that are real, and there are market myths that they're just reasons for people to explain away losing money. And if you follow the way that Mike teaches, you don't have to do that stuff. All right, back to central bank speakers. The U.S. central bank speakers, Harker today, I call her Maynard, but she's Brainerd. Maynard today, Loretta Mester said, you still need restrictive policy to cool prices. There's been no improvement on inflation. Okay. Now, in this they, I'm referring to central bank speakers in the U.S., they keep saying the same things, and you better listen to they, them, zer, because they're telling you. So when they were telling you that inflation was transitory and they didn't have to do anything about it, they didn't. Now, they were wrong, but they still didn't do anything. The guy who taught me initial technical analysis, a guy by the name of Todd Kobayashi, he's got all 3 levels of CFA. He's a brilliant, brilliant guy. He was a technical analyst at Nico Security. He was their chief market strategist when I joined there. And he taught me the initials of charting. A lot of the early stuff that I developed, I borrowed some of his stuff and improved upon it, similar to how Mike adopted some of my stuff and then added his own stuff and improved upon it. I talk to Todd almost every day. And Todd keeps telling me all the things that's going to force the Fed to switch back to QE. And I keep telling him the story of a guy named Neil Grossman, who was the single smartest market person, that includes Mike Arnold, that I ever met. Neil Grossman knew that the Bank of Japan had to stop with their intervention in 1994. They still haven't. Now, Neil was right about exactly what he said was going to happen. And his hedge fund blew up, similar to another guy named John Maudlin. John Maudlin writes these 10-page research papers, and his stuff is absolutely correct. But his hedge fund returns are awful. They're awful. So listen to what the Fed is saying. Okay, listen to what the Fed is saying. Don't predict a pivot or a pause when the Fed is saying to you, there's no pause. Jim Bianco put out a piece a couple days ago that said, stop looking for a pause. Okay? They keep telling you they're not going to pause, and whether they're right, wrong, stupid, or nefarious, they're still going to do what they say in this particular Federal Reserve. So watch for the narrative to switch before the policy switches. And certainly don't position yourself for a narrative switch if they're still saying the same shit. Going over to the Bank of England, man, I have never seen it. I was talking with Amelia Bordeaux, who's one of the smarter FX analysts out there. She was the first or the second person on our podcast. And then she was on our super show where it was her and Cameron Dawson both on the show. And we'll have Amelia on the show again. She was tweeting out the commentary by Andrew Bailey as it was happening. And she basically said, our Fed said inflation's not moving. And Andrew Bailey said, you got 3 days to get your liquidity in place because then we're pulling the rug out from under you. And I mean, I never saw I said to her, that's aggressive for a central banker, don't you think? And she goes, oh, yeah, it's aggressive, but they got major problems in the UK. I've never seen a central banker say, hey, all you funds, if you need liquidity, you got 3 days. I've never seen that. It's
Would not,
nuts right now.
yeah, it would not be good at poker bluffing.
No. And it's funny because we always have people say, like, I'll bump into people on the street and that I know or that know who I am, and they'll be like, well, markets are crazy, right? I'm like, no, I mean, these kind of things happen all the time. That kind of thing does not happen all the time, where the head of a central bank says, I'm giving you 3 days to get some liquidity. So it's funny because they had a $95 billion cap on the amount of bonds they would buy. UK bonds didn't trade at all for 3 sessions. Like nobody took advantage of it. And they came in at prices that the UK central bank said they had already said they wouldn't do. So as of the time that they doubled the amount of bonds they would buy, they'd only exercised like 6 billion of the 95 billion cap. And then they doubled the cap. And that's what Bailey going, look, so Bailey, let's play this out in our minds here. Bailey knows how big the problems are, but he also knows that the hedge funds and the pension funds, that Walker refers to, weren't taking advantage of it. So he doubled the size and he said, you better call me. I'm telling you, we're pulling it soon. We're pulling the offer soon. You better call me. I've never seen that before. That's nuts.
That is crazy, crazy, crazy. I haven't seen that either. And boy, in this lower, and we do have lessened liquidity, even the depth of the futures market is still not great, but the bids were just obliterated.
I know.
I mean, it was like poof, it's gone. And that's what I worried. That's why one of the reasons, along with all the internals I track, that we are potentially poised for a capitulation moment where, especially if we tank through this 3,600 with force, because we've seen there's been a fair amount of buying pressure right around that 3,600, 3,580. If we see that go up in smoke, we could definitely hit the capitulation moment, because this is a pretty hard line in the sand. But boy, wow, when stuff disappears in this market, it's gone quickly.
It's nuts.
It is crazy. What do we got going on tomorrow? We got PPI at 7:30 Central. Oh, we have more Fed speak.
Shocking.
And we got the FOMC minutes. Anything you're considering for tomorrow between PPI, FOMC minutes? That was a question.
I didn't hear the question part.
Anything you're considering with PPI and the Fed minutes tomorrow?
Any sign of any indication of what a pause would look like? Okay, I don't think there will be any discussion of when to pause. But I'm hoping somewhere in the minutes they say if we can get X, Y, or Z, it might be time to look at slowing down what we're doing. So realize, like, one of the things that I wanted to tell you guys, because I'm ranting and raving that you got to listen to the Fed, is they're not actually saying they need to keep hiking, keep hiking, keep hiking. Okay, they're basically hinting to you that they're not going to come off their restrictive Fed funds rate when they get there. And right now, they've got it priced in at another 125 basis points from here. So look for 75, 25, 25, or look for 75, 50, something like that. And then there might be a pause. But like the central bankers who've been specific, like Mary Daly, said, I don't even know if we'll move it in 2024, which is very scary because that's when some of the 3-year arms start to come due. I don't think many people do 3-year arms anymore. I don't know what the numbers of that are. Um, I did look up the numbers on the adjustable rate mortgages are somewhere in the 30 to 40% range. With rates really low, most of them became 30-year fixed, and you had a small handful that were 15-year fixed. But 30% of the housing market getting dumped onto the market because rates are too high is a big number. So, what do you got there, Mike?
Oh, well, we're back up to close to 85% of that 75 basis points. So, I mean, and Mester this afternoon was reiterating the 4.5 number, was it?
Yeah.
So we got, and they see no signs. Well, no signs. So I don't see, even though some people took the Fed speak yesterday as being slightly, potentially, possibly dovish, it was not reinforced today.
I think that eroded as she kept speaking. People are looking at some of the early comments by Brainerd, and then that kind of eroded pretty quickly.
Yeah, and this is I got the chart of the S&P up, and this is what I'm talking about. We have down in this level, this 36, 35, 80. We've had some substantial buying pressure. So if that evaporates, oh, we could be in for a Mr. Yuck move.
What is that?
A Mr. Yuck move?
Yeah, is that something you learned from the speakies?
Yes, that's an official speaky term. A Mr. Yuck move. A Mr. Yuck move is a precursor before capitulation move.
Oh, okay. I'll take it. That I can understand.
See, I'm going into. We have a more sophisticated audience here, Bob. Now, so I'm
Yeah,
going into more technical terms.
good. I'm glad.
If you
Play to your
didn't
audience.
gather,
Play to your audience. I like it.
so what other question? Bob, how will CPI affect the market? Coco wants to know.
All right. So, first of all, Coco, I think more people are starting to understand the Fed is paying attention to PCE, but that doesn't mean that CPI is going to not affect the markets. It is, but I would look at core. So, one of the things we got in the last CPI, right, was got a little bit of a break in the year over year, and we'll continue to get that because of base effects. So, I would tell you guys to start paying much more attention to the month over month than we were before. Okay. Before we were going, we were like, oh my God, we have 9% inflation, we have 8% inflation. If people don't understand what the base effect is, ask me a question about it. Otherwise, I won't waste time on it. But so base effects are going to start to make the year over year number look more palatable. And that is what the Fed looks at, but they look at the core year over year. So you kind of got to watch the month over month. And the reason, so if you wonder why, Jerome Powell actually said, and this is almost a direct quote, we feel like core PCE. No, he said we feel like PCE is much more reflective of inflation in people's lives, or how inflation affects the average person. And I was looking into it, and the CPI is against a basket of goods, and they've got that weird sort of rent number, owner equivalent rent, which they basically ask a homeowner, if you were going to rent your house, what would you pay? And I'm not sure if that's the exact question. They might say, if you're going to rent it out, what would you charge? I don't know. But when you ask a homeowner what their home would rent for, if it would rent for 2,000, a homeowner probably says 8 because they love their home. I mean, you got emotion in that. So that's a stupid way to look at that. But PCE is basically the PCE price index is the measure of change of all goods and services produced in the GDP figure. So it's much more relative of every single price that transacts. Now, that means that it includes something like consulting. Okay. If consulting is going up, now you go to the core PCE and it becomes much more consumer focused, but the Fed is looking at PCE. So that does two things. Number one, it gives you a shorter path to 2% because PCE is only at about 6% versus CPI getting to 9. But I stretched on the question. You got to look at the core. And the core Look, they're expecting 0.5% month over month on the core. I think I'm right on that. Mike, you don't have to switch it. I got it here. I'll look. The expectation on core CPI month over month is zero point 0.5. Last month was 0.6. And if you remember, that was a surprise. Last month was expected at up 0.3, and it came out at up 0.6. Notice that crude oil has started to turn back up, although that won't be in this number. So look at that core that core month over month CPI to see how it affects it. If it's a beat, you're going to see markets get hit really badly, in my opinion.
And then that would lead to the Mr. Yuck move.
It could, certainly could.
Yep.
I mean, you got to start seeing this go down. I mean, if you don't see the headline inflation rate start to tick down, like even their expectations. So last headline year over year was 8.3. You're looking at 8.1 as the expectation. The headline core was 6.3. They're looking at 6.5. So looking for a bump up in the year over year core. Okay. So the month over month will matter more, and it'll matter more as we move forward because of this base effect. But man, these things got to start going down. They have to, because that's what the Fed is looking for, and that's when the pause becomes possible and likely.
And then it's how long the pause lasts.
Yep.
Which will be the next. Then we'll be in the pause pivot thing.
Yeah, it'll be pause for. That's what I don't know what they're going to do when they pause and hold. Are all the pivot people going to finally be convinced that a pause and a pivot are different? I don't know. Whatever. That's actually not that important. But like, language is important, especially in markets. And there could be. Well, you know what?
Hey, we have a new person I haven't seen here. Nat says
What's up,
hi.
Matt? How are you, brother?
And I saw your first next thing, boba hoba Nasdaq to 8K after CPI. Well, we'd have market halts long before that. Now, if you mean over a series of months or weeks, but not right after CPI. Nat wants to know, in Argentina, we have 50 to 100% inflation since years, and I am wondering what's all the fuzz in the U.S.
Okay, I'm going to take that as a serious question, Nat. The U.S. is the world's reserve currency. So if we have 50 to 100, like Argentina has a lot of debt priced in dollars. If we were to have 50% inflation in the U.S., the entire global financial system collapses. So that's what the fuss is. It's not even necessarily about how much we're paying, although for us it is. If you have that kind of devaluation of the U.S. currency, I mean, that puts oil prices. If we had a 50% jump in inflation in the U.S., crude oil prices are $300 a barrel. Global financial collapse, Nat. That's what it is.
So there you go. We don't want that.
Yeah.
Would the Fed pivot?
Just stop it.
Sorry, I had to get that in there. Hold on. What happens when the pivot people pivot to pause people? My head's spinning.
First, I want to know if that's Michael Jordan, Michael Jackson, or Michael Johnson.
For where?
MJ.
Oh, I was assuming it was. Well, it can't be Michael Jackson. Else, we got Halloween problems happening. If it's Michael Jackson, I'll take Michael Jordan tuning into the live stream. Or who else did you say?
Michael Johnson.
Okay, I'll still take Michael Jordan.
Gold shoes, Olympic gold medalist.
Yeah, yep. I'm still taking. All right, we went over that. I'm just trying to see if there's anything else here that really needs to be touched on. Do you see the spiders, or would the S&P, not the SPY specifically the spiders, but I think you mean S&P going to 2,500 if UK doesn't fix this problem? All right, let's just rephrase it. What do you think the fallout of the 3-day scenario, the UK 3-day scenario, is, and the ramifications to our market?
Well, okay, so I'm going to tell you what people have been saying, and then I'm going to tell you what I think. People have been saying that problems in the UK are structural, they're systemic. In other words, it's not the first sovereign that's going to have this type of a problem. And if that's the case, it will force the Fed to pause, then pivot. And it will force them back into quantitative easing. Um, I am not sure about that. So it actually kind of goes to there was a question about why QT hasn't been happening at the rate. I think it's Shashi. It kind of goes with that. Um, I don't necessarily think that's going to happen because of what the Fed has been saying. The Fed has not only been saying we need to continue to fight inflation and rates need to become more restrictive. Situations leave that up for a second if you could, Mike. Rates need to become more restrictive because we haven't had um, the inflation situation hasn't improved. And they've also been saying all these other problems are not our problem. We're focused on US inflation. So people out there are saying this will cause the Fed to pause, then pivot. And the Fed is saying it won't. Now, Shashi asks, the Fed was supposed to retire 95 billion in September. Shashi, their cap was 95 billion. Okay, so that's their cap. So they're not currently selling assets. There's a difference. Okay, they're not shrinking their balance sheet by selling assets. They're shrinking their balance sheet by not replacing the ones that expire or the ones that mature. So if in 2000 and what year are we in, Mike?
22.
22. If in 2017 they bought a bunch of 5-year assets, okay, those will be expired. Expiring is not the word. What's the word I'm looking for, Mike? Maturing. Okay, so those assets will be maturing. Now, in the past, the Fed would say, okay, 20 billion of these assets matured, so they roll off the books. We got our payment for them. We got our principal back. Now we need to buy another 20 billion of those to replace them. They're not doing that. Okay. So people think quantitative tightening is actually going on. It's not. Quantitative easing has stopped. Now, 95 billion is their maximum. So let's use the 5-year example again. Let's say that in November, 96 billion worth of November 5-year notes from 2017 mature and roll off the Fed's balance sheet. They will buy 1 billion to replace it. So 95 billion is their maximum. Does that make sense to both Shashi and whoever else asked that question? I don't remember what even the first question was.
Oh, that's a pretty good explanation.
MJ said it could be Magic Johnson. I think that would be EJ, but
Yes, Saucy, thank you. What, Bob, with the bond market wildness, any signs of fallout to the credit markets?
yes, they're widening. Credit spreads are widening. They haven't widened to any sort of um, what would I call it? Any sort of crisis level, but man, they are close. They are getting closer and closer. Credit spreads have widened. One of the things that's helping that situation is that real yields have actually gone up. Tips. They're about 110 now as of this morning. It's the highest since like April of 2020. So that's helped that situation a little bit. But that basically means that the market believes that the Fed that it's going to work. Okay, that they're going to be able to that their fight against inflation is going to work. So yeah, we're starting to see stress there. They're starting to widen, but it's not a crisis level. I love this MJ on here. Not necessarily the person. No offense, MJ, but it just reminds me of one of my favorite Jay-Z lyrics um, from a song called "N Words in Paris." Normally, I would say it, but I don't want you to get banned, Mike.
I don't want the channel to get banned, or I don't want to get fined from PayPal. They could drain my PayPal account.
Oh no, they could just voluntarily drain your account. No, Jay Z says, "Psycho, I might go Michael. Take your pick. Jackson, Tyson, Jordan, Game 6." That doesn't really rhyme, but when he sings it or raps it, it rhymes.
Hey, options 22. Thank you for
Options
joining
22 is
us.
here. Hey, Christoph was here. Did he say anything we need to
Did I
read?
miss
I didn't.
Christoph? We had to.
Christoph's in here somewhere. He said something, but I don't remember what it
Was
was.
it we? But hold on, we have Christoph and we have Chris. We have a couple different Christophs now.
Oh, we do. We have more than one Christoph. How could
We,
there be
you
more
know
than one?
what? With the channel growing as rapidly as it is, we might have duplicate names.
Well,
And we've got the
There's an original Christoph.
adult dating sites in the chat bots again.
Sterling Yellen did not say that.
That what Yellen. I think the U.S. is doing very well. Yeah, there's a well. Here you go. We haven't
Ugh.
seen any indications of financial instability in our markets. I do like the the
Wow.
the Yellen's been talking. Yellen's
Hey,
been
Daniel McMindy's actually had a good little has a good little explanation there, and then MJ's got another question I can answer.
this one
Yeah,
sort
it
of the
is sort
federal
of.
budget, instead of increasing spending, we limit it to only increasing the increase demanded by the rate of inflation, so we're actually reducing spending.
Yeah,
Yeah.
balancing the budget is a lot different than lowering the debt.
See, when you said Sterling, I don't think she said that Sterling. The first thing I saw was I got the porn because he was referring to
I
this. And I'm like, I don't think Yellen said that either. But
did Sterling mean he bought it?
no, it means he's moderating our the
Taking care of it.
again, we're getting so popular, we're getting the chat bots. Uh Also for retail me, how so you are not part of they, MJ, you're just retail me. How do you analyze short-term notes, not looking at trading advice but rather understanding under par and coupon rates, etc.?
Oh, I mean, I wouldn't be giving you trading advice on this, MJ. It's very simple. So, for example, the Treasury announces what they're going to auction off well in advance of them actually auctioning it. So they set a coupon. Okay. So, for example, I think it was day before yesterday. I'm sorry, session before yesterday. Day before yesterday would have been Sunday. It might have been Thursday. It might have been Monday. I don't remember. But they actually priced a 5 year, no, it was a 2 year bond with a yield of 1.15%. Okay. Now, the 2 year today at some point was 4.314%. All right. So, what does that mean? 1.15%. If they're going to put that out there, that means $100, you get back $101.15, right? That's a 1.15% coupon. Well, nobody would buy that. So the dealers have to buy it, and then they start dropping the price to where people would buy it. So in other words, yeah, I know you want $100 for this bond, but we're already at 4% on the run 2 year, the current 2 year. So I tell you what, I'll give you $96 for that $100 bond. And then that makes the yield equivalent to where yields are now. So that's how you would analyze it. Now, what does an individual do with that? Virtually nothing. You do virtually nothing with that information. Your best bet is to watch Mike's price action yield analysis when he does it, or just take the futures and flip them. But that's what that is. So when you look at a coupon, don't worry about the coupon. If you want to see where it's trading, if you see a 2 year with a coupon of 2%, you think, why would I buy that? Well, you wouldn't be paying $100 for that and getting back 102. You'd be paying like $98 for that and getting back 104 in order to make up for the 4% yield that the 2 year note now has. That make sense?
Can I just focus on price action. My head hurts.
Yeah, I can go. If
No,
there's no
I'm
more
just
questions for
joking.
me, I can go.
Uh, Sashi's got another question. Bob, Apple floated bonds to buy back shares. They are going to mature in late 23 and early 24. Question: why is Apple borrowing money when it already has 200 billion in cash? And when Apple bonds mature, they need to be paid back at much higher price. Is it not a risk for pension funds where Apple is a heavyweight?
They, in this particular deal, they personally, Apple would be thinking that their stock is going a lot higher. Okay. They're actually going to borrow money and they'll make it up on the amount that their share increases. So they think their stock is cheap. Okay. The pension funds that would do this deal think Apple's stock is going to continue to collapse and the bonds are going to be worth more money. That's the trade. They're making a trade. That's all.
So there we go. Sashi follows up with a super chat. Everybody, a shout out to Sashi in the chat.
Thanks for that, Sashi.
What else do we have? Christoph does not have much to say. Just listen to your wise words. That must be Bob's wise words. I need a winter escape for when the lights and heating go out here. Any suggestions, Bob?
Christoph, come to Naples, Florida.
And you can have lunch with Bob.
We could have lunch. We can even stay at my house for maybe one day. Actually, never mind. I don't know who the fuck you are. We're not doing that. All right. No,
Uh,
seriously. Naples is really nice. Naples, Florida is really nice. You won't need your heat.
just thanks, Bob. Just thinking to put some short-term cash into work and treasury notes through secondary market. Yeah, and you can put it especially in short-term stuff, and then you don't have to worry as much about you're just going to collect the coupon. Where
Can you imagine? Christoph seems like one of the most sane people in here. I mean, along with a bunch of others, are all on the same level. And I'd be like, hey, Christoph stays in my house. And the next thing you know, there's like an American Greed. A chat room member murders a trader in Naples, Florida. You never know.
well, it'd be a chat room member murders Florida man.
It'd be a Florida man story.
Oh, that's where we see. We've got Christoph with a Christoph. We've got Christoph with a K. We've got Christo.
Wow.
Where?
Hey, I'll tell you that bond fund thing, that would be financial advice. And I don't see a problem with buying bonds here, honestly. Look, I'll tell you a couple of things. It's not me giving you financial advice. It's Ray Dalio. Okay. Ray Dalio says you have to drop your expectations for stock market earnings for the next 3 or 4 years. He thinks they're going to be negative to maybe 4 to 5% a year for the next 3 to 5 years. That's Ray Dalio. So if you buy a diversified bond fund that has maybe a 4 or 5% yield, according to Ray Dalio, not me, Ray Dalio, you're going to have the same amount of performance without the volatility and with a whole hell of a lot less risk. But that's Ray Dalio. If you ask Tom, I don't know.
Well, we
Hey,
can't ask
Coco
Tom.
asked me a question, but he might be gone now.
Who did?
Coco, is he in the penalty box?
No, Coco. There's nobody in the penalty box besides Tom. Tom's been, I think, permanently banned.
Was Coco? Coco was asking me a question, and I think he was asking why stocks always go up, but I don't remember what it was.
I don't.
I don't want to disrespect Coco because I picked on him a lot last couple of weeks, but I don't know.
If you had a question, Coco, punch it back in here. Christoph is more worried about you murdering him.
You're probably right about that, Christoph. I've been known to have a temper, and I do know how to get rid of a body, especially in the swamps of Florida.
Too much information. You don't want to state that on a live stream, even in jest. Because
It's a jest.
who said I was kidding? Rich wants to know: do you think the bond market will crash?
So, all right, I'll say this. Can you put up a 10-year yield, Mike?
10-year yield. Okay, I got the notes up there. I'll switch to yield.
Yeah. So I thought the 10-year note yield, I thought the high was in for the year in that move that we got at the end of September. Now, so far, I'm not wrong. But for this year, okay, not for the foreseeable future, for this year. But I also thought that Fed speakers would start to calm down. If the Fed continues to say things like, we need to fight inflation, we need to fight inflation, you want to be long yields on the short end of the yield curve and short yields 10-year and out, in my opinion. Now, I could be wrong about that. Okay, there's a massive potential double top forming there, which could make me very right. All right, but it could also blow out. If Fed speakers start to calm down and inflation then doesn't settle, that's when you see it flip. Both Mike and I believe that equities can't really bottom until the yield curve refreshes and goes back positive. That hasn't happened yet. Now, could happen with the 10-year yield going quite a bit higher from here. But I suspect it's more likely to happen with the short yields moving and then the 10-year being stable or moving a little. So I'm not going to say that the bond market, we have to be talking about what part of the curve as to whether I think it's going to crash or not. I think 10-year through 30-year could crash, yes. But, we've kind of thrown the word crash around a lot.
Bob, here's Coco's question. Bob, what's causing inflation? Crude oil is already down, but CPI still hot.
Well, crude oil is not the only thing in CPI, Coco. CPI is a basket of consumer goods. Okay, well, I can actually print. I used to have the list on this screen right here, but I can have it ready if you want me to read it. It's not the only thing in that basket of goods. There's food, there's owner's equivalent rent, there's energy like natural gas. Okay, there's materials, there's commodities, there's all kinds of things. And then PCI is even more complex because it's the entire economy. It's the price of everything in the entire economy. But at the end of the day, if you're asking what causes inflation, I will steal from Milton Friedman, who I still think had the best and only explanation of what inflation is. It's too much money chasing too few goods. So therefore, it would have been decades of Fed money printing, along with stimulus checks going out, which is fiscal, not monetary, when they should not have gone out. That made a lot of money chase goods that weren't available with an economy that was closed. And by some estimates, 75,000 small businesses closing. So even when the economy reopened, there were much fewer places for that money to get spent. So that's what causes it, and in my opinion, what caused it.
Sterling, don't threaten me with lower volatility and not having to watch charts all day, Mr. Dow. Christoph thinks the Fed wants a crash. Bob, you know this. I don't think the Fed wants a crash.
Well, I think they want an economic recession. They just can't say the word.
They don't want a crash, though. They wanted a soft landing.
That's because you and I look at crash as different than a lot of other people do.
Look, my favorite pattern on the 10-2. Yay, a triangle.
Christoph's going to be one of our more fun new people.
Look
at him. He's all over the place.
Maybe it was the Fed printing 40% of our money supply. We got
that could be it. Coco's explanation is completely fine right there. I mean, it's the same thing I said using different words. The real cause is high demand but low supply. Yes. More money chasing too few goods. That can be caused by either more money printed or sent to the consumer by the federal government, and low supply, businesses closing, supply chain problems. Yeah, absolutely.
And Paul says Fed wants to crash the economy so they can push through their central bank digital currency.
Wow. I kind of like that, Paulie.
Oh,
You're now officially Paulie Walnuts.
Polly Walnuts.
May he rest in peace.
Oh boy.
He just officially earned the title of Paulie Walnuts. So we got Ted Ferrari and Paulie Walnuts in here. I love it.
Oh boy. Well, you're gonna have to now.
Everybody
You're
gets a
gonna have to
mafia
come
name
up
when
with
they say
nicknames for
something
more
good.
of the regulars. You just
When,
can't dole out a couple, Bob.
when they say something that's amusing and good, they get a mafia name. So I got two so far. I got Teddy Ferrari and I got Paulie Walnuts.
Oh boy. We're now.
Keep it
This is
going.
the channel's comments are gonna explode. I'll never be able to keep up.
I would posit that you guys should change your username to your mafia name once I give you one.
Is it that easy? Let me ask you guys this. If you paid for a managed fund and they bought diversified bond funds this summer, would you fire them or hold the fund with their high fees?
I wouldn't hold any fun with fees, but it really depends. Okay, so this is more financial advisor advice, which Mike and I are required to say we're not either. You can buy your own diversified bond fund. So, yeah, if they're charging you fees to do that, I would ask them why they did that and ask for a refund on your fees. If you're a client that matters, they'll give it to you. If you're not a client that matters, they'll say, go ahead and go somewhere else. And yeah, maybe you should. But I don't know. I don't like to tell people that because it's really their overall performance. When Mike and I had the stock think tank, when we were growing it, we said at some point we might just buy long and short ETFs while we wait to get in the next individual stock trade. Okay. But, there might be a reason for that if they're doing other good things for you.
Oh, by the way, I missed a question from way earlier. It was, do I trade capitulation moves? Well, it's not like a Fed meeting where do you trade the Fed meetings? Because that's actually defined as a point in time. You could be in a trade during a capitulation move. You could get in a trade because it's massive momentum one way or the other. In a capitulation move, there are plenty of trades to be had from a momentum style in a capitulation move. Then it all depends if they can get executed or not, but you could already be in a trade and capitulation move hits. It's not like, oh, wait, we're going to have a capitulation trade coming up. Do I want to trade it or not? It doesn't quite work that way. If it did, then the answer would be yes, because the capitulation trade would be massively short, then prepare for the long reversal because that's the capitulation move. It's just not announced like that. They're not calling me up to tell me.
But Christoph just earned himself a mafia name. He's the German.
Which Christoph?
Christoph with a K. He's the German.
The mafia is a myth.
Yeah, so there was Frank the German Schweiss, and they put him to death, basically. He was in jail for most of his life, and he still said the mafia didn't exist. Frank the German Schweiss, big hero in the Chicago outfit. So Christoph is now the German. And Willie S. just gave himself a mafia name, and you can't do that.
You can't. And Boeing is not a good mafia name.
Is he a pilot? William, are you a pilot?
William trades Boeing all the time.
I can work with that. Say something clever in the next live stream. I got to go.
All right. Well, hold on.
One more?
Ted literally lived next to an old mobster in Chicago who introduced me to guys named Mike the Bomb and Jimmy No Knees.
Good stuff. You must have lived somewhere on the west side or near Chinatown.
Did you know Jimmy No Knees?
No, I didn't. Okay, I'm really not going to talk on a recorded thing. Got to go.
Will you be back on Thursday?
Yeah, I'll be here on Thursday.
Okay.
We got CPI Thursday?
CPI is Thursday. Tomorrow's PPI and Fed minutes.
Probably a two-shot appearance.
Okay, we might have Bob for morning and evening on Thursday.
Teddy Ferrari was on the west side. I knew it. Okay,
Teddy
gotta go.
Ferrari on the west side. All right, William also used to work for Boeing in Chicago. You'll have to come up with. You will have to consider. We got the Bob's
It'll have,
now on the hook for mobster names.
it'll have something to do with airplanes. But you got to say something. See you,
Yeah.
Dimitri. Got
All
to say
right. We
something.
will. We will
All right,
see
guys.
you. All right. Thanks, Bob.
See you Thursday.
Bye. Okay. So, real quick, nice little what what really watch here. This is very interesting. You could just see it in the charts. You can see it in the charts. Remember, we have the strike prices and the options down here. As I've talked about, you got this 3600 dipping into the 3580s. We break this level, especially with momentum, we could see the capitulation move. I was asked about targets for the capitulation move. One of the at this point we got 3509 at least, most likely 3477. I don't think 35.9 would qualify yet. We're pretty much below 3490 at a bare minimum. I think we have to hit at least 3475 area, at least on a down move. So we're a ways off, but you would see a pretty substantial drop. Most people will know tuning in here. Now, we've been working off, still holding. There's no guarantee with this 3600 that will be breached. There's a ton of buying pressure down here, which we could get the bounce until I will review it, until I did the midday live stream and until the Bank of England opened their mouth. We had a really nice flagging pullback into the 15-minute rotation zone and prior support. And guess off this chart when the 3-day ultimatum was given. So this is also why you trail stops. So just to reiterate for the people, hitting the stop reduction right here. And if you're trading it even on a shorter term, again, this could be traded even on a little break. You don't have to carry this. But the worst case scenario was the close below the 62.5. Once it started moving, you see there's the close, or the break below the 75, but you got the close easily before that on the 62.5. The more sensible stop, I shall tell you, because this is the market dependent, especially when you're going against the overall trend. My personal stop key area was below this, the 37.5, and the breakout move from here, which was retested. Because, all right, once you get this happening, it's bon voyage, bids disappearing, everything just getting slammed. That was key. What I'm now watching for overnight. Wrong way. I keep forgetting to reset that. I can take this off. Just wanted to reiterate why we use stops. Key area I'm watching now. We have this prior high tested with support. Now resistance from your Bank of England breakdown move. By the way, we could see some interesting, once you get the European Open overnight, we could see some interesting moves because the Bank of England announcement was after the close. So they only tanked the US markets. Key area is roughly this 36.25 area for me. Running back up. Yes, longer term double bottom. Remember, yesterday we had on a close above yesterday's high was an aggressive buy. Still a close above today's high is an aggressive buy. So none of those triggered. Yesterday's did not trigger today because we didn't get above the high. We still have that. Does that mean we front run it? Not unless there's another pattern. And again, I'm watching for a breakdown play still potentially. And the overall potential double bottom is in play. Now, if we got a capitulation move, that potential double bottom would be off the table. So that's all your bullish and bearish scenarios. But based off this volatility, by the way, our markets, and I'm talking about these financial futures, has more volatility at this point than friggin' Bitcoin. Go figure that. Bitcoin's gone to sleep. Our markets have gone insane. That's why, again, keep your stops in there, at least a catastrophe stop. NASDAQ had this 10,785 level, came right down there this morning, just missing it, and then with the afternoon sell off, hitting it again. So those are done now. We don't have a substantial pausing bar just yet. So my next level is 10,737. And then I will get some, depending on the overnight price action, we will have some potential moves or some potential other price action. The potential double bottom, I shouldn't have removed that just yet because then it's 10,681. The potential double bottom is still in play. Aggressive buy would be above today's high, so the same thing always holds. That could be on a break intraday if we do get upside momentum. PPI before the open tomorrow. Fed meeting minutes at 1 Central. Just double checking. It should be 1 Central unless I'm having a brain fart. Yes, 1 Central time. Just wanted to double check my own stuff. So that's where we sit. Not going to review the Dow and Russell right now. Notes. Notes, we had the little double complete. On a short-term basis, this was a valid head and shoulder top and then just happened to get the sell-off after that. Just wanted to point that out on a very short-term basis. Other than that, the potential double bottom is still in. We do have a potential aggressive buy above today's high. I don't know if reward risk will work unless we really start getting also a close above the bottom of the rotation zone. Why? Because then we're into a clear path move and my target will be closer to the top of the rotation zone. Dollar index, by the way, if you're looking, I'm trying to do something since the standard dollar index is delayed on this feed and the price for it is outrageous. The dollar DXY from Capital Com is the one I will be referring to. I'm trying to make this more friendly to people. It's close to the same price action as the futures. Still, we got all that rush into the dollar. When the market, see, this was the rush into the dollar with the market sell-off triggered by the comments and still expecting 114.08 as the next target higher. We do not have a potential double top yet. We have to get above the 75 to get that. VIX bouncing back actually pretty decently after the little rapid move up. So retesting this is the key area. I'm going to be watching pre-market tomorrow, 33.53. And by the way, since I can't get VIX data and I'm tired of dealing with that delayed stuff, I am now, even though it's not 1-for-1, it's pretty close. I'm using the TVC VIX on this platform just for transparency to everyone. I forgot to mention this morning, but in case people were wondering, this was a valid double top. Just showing you here for the people trying to learn. All three price targets hit. So this is an orderly pullback so far. We did have a potential double bottom, but this turned into a triple. You see there. If it does break above this peak, though, of 90, essentially, we have a potential move back to around the 91.75 area. Keep close eyes on we again with the dollar little bounce back strength. We have a ceiling. The yen, at least the Bank of Japan, has done a stellar job at so far capping the yen move. Look at this. Even with the stronger dollar, look at this compressing right against the prior intervention point. At some point, though, as this holds up there long enough, this will get a breakout play if they do not intervene. And then there will be an intervention at a higher number. Keep that in mind. Also, Euro still, we're now with the 2-day closes below the 62.5, still expecting a breakdown in the euro. You had a strong reversal with the 3-day ultimatum on the pound, but the key level I'm still watching is this 107.83. With that, Bitcoin finished that double top pattern, and now there is literally nothing. If the market starts a massive breakdown, though, there is a short play to retest the lows from mid-September, third week in September, and then if we really get a downward move, I'm still expecting this downward longer term, but the next major target is mid-1600s. Tesla still breaking down. This is a very key support level. Elon can't start selling till after earnings if he does need to sell for funding of Twitter. So we're still in that news story stock mode. Not that Tesla's pretty much always a news story because of Elon, but now we have concrete news story with the Tesla stuff and the funding of it. So next target is 213. 213 14 to 213.38, and then we break there. I'm watching for a return to about 207. There we go. Oh, I'm glad you guys had fun with Bob. Thank you again for tuning in. Saw the tick gap down today on the 5-minute. I'm curious what length you view the tick through during momentum moves. I still use 5-minute. I can watch it even on a 5-minute if we are really in major momentum. At key levels, I will drop to the 1-minute, but I can still pretty much gauge it on the 5-minute. And yes, I did the intraday talking about the tick. So, and this was, if you wonder where the selling pressure came in, this was it. You see all this? Kaboom. And no, this does not change the levels. This kind of spike down, though, is this triggered massive sell programs. I told you before, it doesn't just have to happen on the open. When you get ticks way down here, especially below 1500, those are massive programs. And I will start, especially with divergence moves. So if the futures continue downward, but we start getting higher lows in the tick, I will start watching for a snapback reversal. Okay, and you see with the rally into the close, snapped back up. But this was the key break in the tick. This was just, we had the run up in the morning. All right, then we went into, this was lunchtime. This was lunchtime. And then the snap moved down. You still have overall selling pressure versus buying pressure overall in this market. However, it is being absorbed at this key level. So that's why that's the level that needs to be broken, this 3,600 area. If we continue with selling pressure and this buying cannot absorb it down here, I will be really watching for that break lower. So far we've had, you can see, multiple step-ins. And this isn't light step-ins. You see double here, snap move. Coming in here, little snap move. This, snap move. It's not hanging out at these levels very long. Spike down here, snap move. Spike down here, snap move. You see what I'm saying? So if we break this, watch out below. That's all I can say. Oh, Ted, the good part of town, the west side, huh? The guys own a little club on Grand Avenue just west of the 94 overpass. How long since you lived there? They use your traditional technical analysis against you there. I don't understand that comment. They? Again, are we back to the they? Oh boy. You should have tuned in earlier, Mike. Can we look at NVIDIA? Then I'm going to wrap this up. This has been very long. NVIDIA. By the way, before I get to NVIDIA, just wanted to show you the SMH. Close below the 62.5. Still watching for that weekly because we could get the snapback move before then. But right now we fulfilled the other head and shoulders top pattern. That is done. I'm not going to take this off though until I do the sector overview this weekend. And I'm watching to see where this closes on a weekly basis because we're so oversold. But even off the daily, we should still see after the next snapback move, which, by the way, just from a sector point of view, you see we had support. The break up last week, the close back below it, and now a breakdown, and the 200 weekly is key resistance now. So even on rallies in anything, it is nothing that is pleasant to hold longer term. Now, before that, we had the sell patterns. I'm just reiterating too because I'm seeing a lot of bottom picking trying to happen in the semis. For example, I'll give you a little example. On a move above today's high, should we not do some capitulation move but start rallying back up? That would be a buy signal, but the target, this would have to be done intraday because a daily close above this would be the only confirmation. You see the prior support becoming resistance, and you have the overall sector below major resistance. But that is the only very micro buy pattern. And this is, you can use a flat, even though this is technically an upward sloping neckline, you can use a flat neckline on this pattern. This fits into the new research I've been doing. So you can fit, if you were looking for another pattern which would slightly front run. Again, I would not comment or go off a big bounce here. However, and that's just a return to the breakdown zone. It actually needs a slightly higher. I misdid the, it needs to go here. But you see, that's only returning, not even to the daily rotation zone. So everything, including the percent B very aggressive buy, this only warrants a return to the prior support becoming resistance. Everything else is still longer term to the downside, especially with the sector. Probably, yes, we could get a snapback move this week and still a weekly close above that on the sector. But overall, the probabilities are shifting to see a substantial more pullback longer term in semis. The next target on NVIDIA is about 103.30. And so that's the next harmonic target, though, right in front of there is the 75. It was about 109.60, but longer term, especially if we get that weekly close below that level, I'm watching for a possible return to 70, which is a pretty key breakout zone back from March of and April of 20. And you can still have some major P to E compression in NVIDIA. Keep that in mind. Earnings for NVIDIA at this point is not until mid-November, right before Thanksgiving. Do I think dollar could get to 116? Let me go to the other dollar thing I still have. No, actually, I don't. I took them off because I was transitioning the chart. I need to rephrase that. I can't say transitioning the chart. People might take it the wrong way. We still have lots of dollar strength besides the next minor target being 114.08. That's the next minor to the recent highs. On a break above it, stop reduction 115.50. Next minor target above there is 116.12. So yes. Do you think dollar could get to 116? Yes, I do. We could easily get to 116 area and form a pretty significant divergence. Correct me if I'm wrong, but Bitcoin 2 hours from potentially closing a daily below the 62.5 of this little move. I think you're talking about this most recent run up. Yeah, it's right there. 19,025. And it's roughly 2 hours away. All right. That's about it. Let's see. I agree. I'm sorry if I skipped some comments. I'm running out of steam. Traders can trade in any environment. That is a true statement. Strong setups are the trader's paradise. That is completely true. Strong setups generally lead to very good trade expectations and decent probabilities. All right. No, don't start, Daniel. Please don't start. You're welcome, Christoph. We love, love, love the dollar to get 1 to 16 or higher. Well, there's that next harmonic. With that, I'm going to wrap it up for now. Thank you, everybody, for tuning into this very long session. I will see everybody after PPI drops tomorrow, so don't be caught off guard with that. 1 hour not when I'll be in 30 minutes before the market opens. 1 hour, though, is the PPI number dropping. You are welcome, Jacob. With that, I will talk to everyone later. Thank you for tuning in. Bye for now.